Assalamualaikum warahmatullahi wabarakatuh. We are from Group KMA2. We are going to present our group assignment which is about assets and liabilities performance and discussion on Quick Finance House Malaysia Berhad, Alliance Islamic Bank Berhad and Public Islamic Bank Berhad at year 2018, 2019 and 2020.
First of all, let's look at the performance of the assets of three Islamic banking institutions, namely Kuwait Finance House Malaysia Berhad, Alliance Islamic Bank Berhad, and Public Islamic Bank Berhad from 2018 to 2020. The total assets are taken from the balance sheet from each bank's financial report. Based on the asset performance of these three Islamic banking institutions, we can conclude that the highest total assets from 2018 to 2020 is Public Islamic Bank Berhad and followed by Alliance Islamic Bank Berhad, which is the second highest total assets. Furthermore, the total assets of Kuwait Finance House Malaysia Berhad is in the last rank from 2018 to 2020 compared to two other banks. However, these three Islamic banking institutions show a consistent increase in total assets from 2018 to 2020.
The purpose of asset. First of all, cash can be considered as the most liquid asset and can be used immediately to execute financial transactions such as purchasing and other immediate necessities. It can attract a large amount of liquid funds resulting in higher earning. Therefore, investment securities are purchased by banks to hold in their portfolios. The investment securities used as collateral by banks can be either equity or debt securities. According to the principle of Sharia, the equity instrument of the bank grants musyarakah financing as a part of bank's activities. Next asset is trading securities, which is related to the gold depository account. Trading securities purchased by institutions are usually securities issued within the institutional industry. Last but not least, the objective of statutory reserve is to ensure that financial institutions have enough cash on hand to cover any genuine dispute by customer. Hence, it is a tool that banks use to control liquidity. Therefore, a monetary asset is an asset whose value is fixed amount of cash. Example of monetary assets include cash, investment, account receivable, and note receivable. All monetary assets are considered to be current assets and are reported on the company's balance sheet. That's all from me. Thank you.
Now, let's look at the bank risk due to holding the type of asset. In general, the bank has been taking proactive measures to manage various risks. Therefore, the risk borne by the bank due to holding investment security is market risk, which arises from the bank's activities in capital markets. Banks are more vulnerable if they are heavily involved in capital market investing or sale and trading. Besides, the rating risks emerge as a consequence of holding trade securities. It occurs whenever a banking institution is assigned a number to accomplish or maintain, which directly impact the cost of financing. Not only that, the bank risk due to holding cash is known as liquidity risk, which refer to the bank's ability to access cash to meet funding obligation, which will impact the liquidity risk. Meanwhile, the operational risk arises from holding other assets. A real-world scenario occurs when fraud compromises a bank's securities, harming the bank's reputation. Moreover, credit risk is the bank risk due to holding the financing. It occurs when borrowers or counterparties fail to meet contractual obligation in derivative and guarantees offered. Finally, the liquidity and solvency risks arise to the keeping the statutory deposit with the central bank. In some situations, financial firms' ability to accept deposit and issue their banknote was limited by a necessity to maintain ratio reserve balance.
Next, the method or instrument that banks use to hedge the risk pertaining to the type of asset. First, the method that the Alliance Islamic Bank used to hedge the risk on the type of asset is evaluation in credit risk. The bank evaluates the risk of a default on the asset as of the reporting date to determine if there has a significant increase in credit risk. Besides, there are several events related to the evaluation process based on contract. Then in credit impair method based on negative impact of the expected future cash flows. The observable data such as quantitative data are used to show a financial asset is considered credit impaired if the counterparty fails to fulfill contractual payments within 90 days of the due date. Next, Public Islamic Bank Berhad. The bank used cash flow hedging for derivative transaction to fit the specific hedge asset requirement. Cash flows hedges protect against variability in future cash flows caused by specific risks. Next, trading derivative tools method that the bank take conservative views of the changes. The bank used profit rate swaps to hedge the risk associated with trade and investment securities and debts. Then derivatives are assigned in a cash flow hedge to handle the profit loss volatility associated with derivative to qualify for hedge accounting purposes. And the last is the method that Kuwait Finance House Malaysia Berhad uses to hedge the risk based on the bank derivative designated for fair values consists of foreign exchange related contracts that are used to protect against exposures to variability in foreign exchange currency. The hedging strategy is applied toward interbank borrowings and corporate customers' deposits based on income statement. Next, the measurement of the hedge item result recorded as accrued FX swap cost deal between spot rate and forward rate.
So next, I would like to present on the performance for liabilities for this bank. So the first bank is the Alliance Islamic Bank Berhad, which is we can see that performance is the trend is the on upwards trending for this bank for 3 years. So the next bank is the Public Islamic Bank Berhad, which is we can see Public Islamic Bank Berhad and Kuwait Finance House. The trend is downwards for these 3 years from the 2018 until 2020. For this performance, we can see that the downtrending most probably due to the new in application for the Islamic system finance in their banks. So that's all. Thank you.
Next is liability. First is the purpose of liability and the importance of type liability. Liability is something that a company or individual owes. Example of liability is loan, account payable, wages payable, interest payable, and many more. The purpose of liability are used to finance operation and also make transaction between businesses more efficient. Importance of the type liabilities. Liability we have two types. First is current liability and second is non-current liability. Current liability is enabling company to plan liabilities their finance and calculate important ratio that relate with the company activities. While non-current liabilities is to help access solvency. Non-current liability are posted in a company balance sheet as a separated entry.
Is the bank run to Kuwait Finance House. Credit risk is the risk of suffering financial loss that fail to fulfill their promised obligation to the bank. Liquidity risk is clear has the exposed to loss as a result of the inability to meet cash flow obligation in a timely and cost-effective manner. Public Islamic Bank credit risk refers to the potential loss of revenue failing to meet their contractual financial obligation. Market risk is the risk that change in market variables such as interest rates, foreign exchange rates will reduce the bank's earnings or capital. Alliance Bank Islam market risk, which is the risk of loss of earnings arising from change in profit rates, foreign exchange rates, equity price, commodity price, and India implied volatilities. Liquidity risk is the risk that the bank is unable to meet financial commitments when due.
Next is method that Alliance Islamic Bank used to hedge the risk pertaining to type of liabilities. We have two methods. First is stress test and second is sensitivity analysis. Stress test is normally used by bank to measuring their potential vulnerability to exceptional but reasonable event. The results are then consolidated to provide an overall impact on the bank is financial result and capital requirement. Second is sensitivity analysis, which is used to measure the impact of changes in individual stress factors such as profit rate or exchange rate. It is normally designed to isolate and quantify exposure to the underlying risk.
Besides that, the method that public Islamic bank use to hedge the risk pertaining to the types of liabilities is Islamic profit rate swap, which is used by the Islamic bank that generally still refers to the conventional swap rate of LIBOR. It is also used counterparty credit risk and over-the-counter through the process.
Bank Kuwait Finance Malaysia Berhad. Firstly, profit or loss. Any gain or loss arising from a change in the fair value of the financial instrument is recognized in income statement unless they are part of the hedging relationship that qualifies for hedge accounting. When the hedging instruments have been sold or terminated, any collective gain or sold that have been recognized in other comprehensive income at that time remains in other comprehensive income. Secondly, Ijarah. The most frequently applied inflation techniques include forward pricing and swap models using present value calculation.
Based on the table above, both Alliance Islamic Bank and Public Islamic Bank have significantly increased their total assets throughout 3 years, whereas Kuwait Finance House similarly decreased their total assets year by year. For both Alliance Islamic Bank and Public Islamic Bank, since their total assets keep growing, it is a sign that these banks are growing. Between these three banks, Public Islamic Bank have the highest amount of total assets and Kuwait Finance House has the lowest total assets. We believe this difference may be influenced by disparities in size. Public Islamic Bank are bigger and stronger than the other two. Therefore, having a bigger amount of total assets is justified. Based on the calculation ROA, Alliance Islamic Bank recorded the highest return on asset, which is 1.63%. Then Kuwait Finance House with 1.60% and the lowest Public Islamic Bank with only 1.37%. ROA is a key metric to determine how well a bank can extract profit from its investment ringgit Malaysia expense. A declining ROA, on the other hand, shows that the bank may have overinvested in assets that have failed to generate revenue growth, indicating that bank is in difficulty. Hence, for the ranking, Alliance Islamic Bank gained the first place, Kuwait Finance House the second place, and the Public Islamic Bank the third place.
As we move to comparison of liabilities, according to the table, we can see that Kuwait Finance House has the lowest liabilities among others. From this, we can see that any decreases in liabilities is a use of funding, and it also implies that the company has paid back what is owed to supplier. According to that, both Alliance Islamic Banks and Public Islamic Banks liability are increasing from 2018 to 2020. Any increase in liabilities means that they are increasing in a comparable which a company purchase good on credit and conserving its cash. For liability part, we choose debt ratio to measure the company's performance. Debt ratio is a solvency ratio that measures a firm's total liabilities as a percentage of its total asset. In a sense, the debt ratio shows a company's ability to pay off its liabilities with its asset. The formula to calculate the total debt ratio is total liabilities divided by total asset. Based on the calculation above, we can see obviously that the Alliance Islamic Bank has the highest debt ratio, which indicated as first rank with the total amount 0.93 compared to another bank. It means that this company has more debt on his loan and the risk of default is high. Consequently, too much debt may affect the entire operation if cash flow dries up. Other than that, companies not capable to service their own debt and may be forced to sell off assets or declare bankruptcy. Next, Public Islamic Bank is considered as second high debt ratio because the amount is 0.88, which is quite near to Kuwait Finance House. This company also might have high leverage. Once its assets are sold off, the business is no longer can operate. Public Islamic Bank considered as third ranking among others because this bank has the lowest amount of debt ratio, which is 0.79. This means that a lower debt ratio usually indicates a more stable business and the potential of long life because a company with lower ratio also has lower overall debt. Critical part, we choose to evaluate about Kuwait Finance House based on stable and negative outlook. For stable outlook, KFH has a strong franchise as the country's biggest Islamic bank and the country's second largest bank. As a result, it expanded its bank and investing services. Next, for negative outlook on KFH, it reflects a high market volatility and poor asset quality, as well as a significant presence in a more difficult market than Kuwait. Furthermore, in view of the risk and significant exposure, the bank capitalization is barely adequate.